I'm Charlotte McLeod with the Investing News Network, and here today with me is Peter Krauth, editor of Silver Stock Investor and author of The Great Silver Bull. Thank you so much for joining me today. Great to see you.
Same here. Thanks very much, Charlotte. My pleasure.
Yeah, so we're here at VRIC and we're kind of catching up on our conversation at PDAC back in mid-2022. So you actually gave us, I think, quite a good silver price prediction for 2022. You told us we might get to 25 or a little bit over, and we did approach that area. So looking now to 2023, what are your expectations for silver?
So I think that we could see it approach 25, probably say in the first half here. I think given the kind of action we've seen in the price since last fall when it bottomed around 18, now we've had a run up to about 24. I think there's some legs still to that in the first half. And I think in the second half, we could see silver go perhaps up to approach somewhere around even $30.
People would be really excited about that, I think. So we'll see if that happens. So let's take a look at some of the price drivers for silver. When we were speaking in that conversation mid-2022, we talked about investment demand as the wild card, industrial demand as more of a base. And investment demand, it turned out to be quite a strong wild card. So let's talk about what we saw there in 2022. And with that strong demand, how come we didn't see more of a move in the price?
Sure. So I agree. The investment demand was strong. Now we can look back with some hindsight and see what numbers we were at. And demand-wise, investment was up 18%, which is really strong in a single year, especially given what we saw in the couple of prior years, 2020, 2021, were also really strong years. So why that wasn't enough, I think what happened was, you had central banks starting to raise rates, and people started to look at alternatives, right? Bonds were not that interesting until rates started to go up as much as they did. And so for someone to be able to park their money at 4% for as little as a year gives them lots of flexibility. It may not be keeping up with inflation, but it certainly feels good to get 4% and not take risk relatively. So I think that's partly what happened, is that demand shifted to alternatives, bonds that started paying yields, good yields on short terms. And but then when we got to the fall, I think that had pretty much started to play itself out. And I think you had the precious metals start to look forward and see that an eventual topping in rate hikes was in the reasonably foreseeable future. And I think that precious metals started to price that in last fall. Gold and silver pretty much bottomed around September, October. Gold is not up as much as silver is, but it was also not down as much. But from the bottom of say, I think it was September, October, silver bottomed just below $18, and we're now somewhere close to 24. So that's about a 33% gain in about 5 months. Quite respectable. So I think that this topping out in rates from central banks has essentially been priced in when I think when you get more of an official stance from the central banks that, okay, now we're on pause from all this hiking, I think we're going to see the precious metals start to pick up even that much more. And that's why my expectation for a considerably higher price in the second half of this year is quite strong.
All right, so there's a couple of things that we definitely want to come back to there, such as rates. Before we go there, we were talking about investment demand for silver, which was very strong in 2022. Really, I believe, according to the Silver Institute, we got to an all-time high for overall demand of 1.21 billion ounces. So that sounds pretty significant to me. Do you want to maybe comment on that?
Absolutely. So to think that demand was up 16% last year over the prior year, and yet supply, because silver supply is from two things. It's from mining and it's from recycling. And so recycling, can vary quite a bit. Mining is perhaps a little bit more predictable, but mining was up a couple of percent. I think recycling was up 1% in any case. Overall, total supply was only up 2% versus demand up 16%. So that was a huge discrepancy, and what it led to, if you look at the last 3 years, in 2020, there was a surplus of 70 million ounces. This is all according to the Silver Institute. By last year, you had a shortfall of 194 million ounces. So that's a swing in 3 years of almost 270 million ounces, which is about a quarter of the annual, not quite, maybe 19 or 20% of the annual supply of silver. That's just huge. And I was actually just looking at a chart that goes back from 2018. I think it was Bank of Montreal, BMO, who had looked out forward about 8 or 10, 12 years from 2018 to 2030. And it was only not until about 2029 or 2030 that they had actually forecasted deficits in this kind of level of about 200 million ounces. They were actually expecting back in 2018 that we would have a deficit this year of closer to about, I think it was 30 or 40 million ounces. So it's about 5 times that much. And I believe that a lot of that demand part of it is the lack of supply, and part of it is this increase in demand that I think was not expected. So it seems like a lot of that demand has been pulled forward, and because of the lack of supply, we see actually mine supply has been dropping off. The 3 largest suppliers are China, Peru, and the single biggest is Mexico. Peru is having some issues. China's numbers are not necessarily that reliable, but if you just look at Mexico and Peru, since 2016, mine supply has been falling off quite significantly. So we're dealing with lower supply from 2 of the biggest suppliers. We're dealing with lower ore grades. And so you combine that with increasing demand that's coming from industry and from investment, and you have a bit of a perfect storm.
Right. Okay. So on the supply side, you kind of answered my question about how it was looking in 2022. Looking forward, so we know that primary silver mines, they are few and far between. A lot of it is produced as a byproduct, some of gold, but also of industrial metals like copper, zinc, that kind of thing. So I've been wondering, if we are heading toward a recession, what does that mean for silver demand if it's connected to these commodities that are used in those industrial applications?
Exactly. So I think it's interesting and important for viewers to consider that over 70% of silver actually that's mined only comes from mines that produce other things, that produce gold, lead, zinc, or copper. And so if as much as 70% comes from mining these other metals, you are dependent on the mining of those other metals. So you could assume, I suppose, that if you go into a recession, the demand for gold would go up as a safe haven, and that would translate into higher demand for silver. But then about half of silver goes to industry. And so if you figure, all right, well, that might weigh against demand for silver because of all of its industrial applications, the risk is that, I see 2 sort of counter arguments. One is that you may get a slowdown in base metals mining, which will absolutely affect the amount of silver that comes out of the ground, because 70% again of it comes from mining these other metals. And then if you look back at 2020, what happened when we had this health/economic crisis with massive stimulus, and what seems to be acceptable to citizens is that when governments stimulate, is they tend to look for programs that are infrastructure related, that kind of thing. And so with the huge green transition that we have, that's really gaining a lot of momentum, silver is a huge part of the green transition. You have solar panels that are 12% of the entire annual silver demand. You have EVs, where EVs require twice as much silver as gas-powered vehicles, for example. You have electronics, you have medicine. So the demand for silver from all of these areas that even in a slowdown would very likely get stimulus, because I believe the governments will step in and stimulate once again. We saw that happen in 2020, and I think that's reflected in the demand numbers that we've seen in silver over the last couple of years. These huge stimulus programs have, I believe, translated into big demand in silver. And so, again, these are my arguments in terms of counterbalance to a potential slowdown recession. You'll get stimulus, and then you'll get the investment buying factor for silver.
Really interesting. And so as we talk about silver's role in industry, do you think we would ever see industrial users of silver start to sign, for example, offtake agreements? Because my impression is that they don't really do that right now.
So they do offtake agreements to a certain extent, absolutely, which you kind of see with base metals as well. But actually, my view is that what we're going to see is silver become more of a critical metal, like you've seen with a lot of the rare earth metals, the rare earth elements, things like lithium, tellurium. There are all kinds of vanadium. They're these specialized metals. I think that because of silver being so important, and again, I kind of point to solar because it's huge in terms of demand in solar, and solar manufacturers, panel manufacturers have a big interest in thrifting, meaning trying to use less and less silver for each panel because of cutting their costs. And if you look at how that has played out over the last 10 years or so, it has come down, but it's trailed off. It's very much flattened, while the number of solar installations has grown tremendously. In fact, way more than the forecast that we had just a few years ago. The International Energy Agency thinks that over just the next 5 years, we could see triple the current level of solar panels being installed. And they think over the next 8 years, we could see 8.5 times the amount of solar installations that we have now. And if solar requires 12%, which it does, of current silver demand, I mean, the demand for silver from solar alone is going to go through the roof. And I think a lot of this is just simply not priced in yet. And back to your point, I think that we are going to see manufacturers actually start to step in and take more active roles in silver projects, in silver companies, and go beyond offtakes and really take a leading role.
Okay, that would be very interesting to see. So I think we've gone fairly thoroughly through supply and demand for silver. Now I want to go back to, you started to talk about the Fed and what's going on with that. So let's take a quick look at what's going on there. I don't believe that we'll be publishing this before the next meeting, which is coming up very, very soon. But your longer term view on hikes, inflation in 2023, where are we set?
Sure. So, the highly expected level of hiking, the most expected level is a 25 basis point rate hike at this sort of February 1st or 2nd meeting. And I think that we may get one more 25 basis point hike at the next meeting. And it's very likely, I think, that the Fed is going to pause at that point, and perhaps pause for a long time. At least that, I think, is the plan. If you get some sort of crisis, I think that is probably quite likely at some point. Something's going to break, whether it's credit markets, bond markets, emerging markets, at some point, because the effect of hiking so much around the world and so quickly. We saw what happened in England, for example, with the gilt market, and the government had to step in and reverse course. So, the hikes from the US Central Bank, for example, from the Fed, have so much more effect, so much, or watched so much more closely. And the dollar being the reserve currency means so much debt is denominated in the US dollar. I think that we could see some kind of crisis. It's not even that important what it is or where it happens, what it comes from. Just the fact that I think the odds of it are that much more likely as we go ahead. And if we get that kind of thing, the Fed's going to have to decide, what do we do? If it's bad enough, is it serious enough? Do we actually start cutting now because we really need to stimulate? We try and hold out and prove that we said we were going to be tough as long as we need to. My bet is they'll back off. If things look bad enough and serious enough, they will back off before they try and just sort of try to maintain a reputation of being tough.
Okay, so we are heading into definitely an interesting year in 2023, and I know we've spoken about this before, but I think it's a good plan to remind everybody how they might want to approach the silver space. If they listen to all these things and they feel optimistic, how should they approach it? What's your recommendations?
So it all depends on their level of comfort and level of experience at this point already. But let's say someone who has little or no experience in the market, in the silver market, I would say just start by going out and buying a little bit of physical silver, a couple of rounds, a couple of silver coins, maybe a small bar, 10 ounce, 100-ounce bar, and get comfortable with it. Look at it. You know, it's almost magical. It's nice to see a Canadian maple, for example, or a silver eagle, and look at that and get comfortable with it. It's very I'm not sure what the word is, but it's just, you know,
It feels good. It's
yeah,
tangible,
exactly.
right? You know?
It's tangible. It's money, and it's been money for thousands of years, and from there, if you want to take further steps, the lowest risk way to play, let's say in the silver stock space, is going to be through buying a silver ETF. That's something that I think makes sense. You can get your feet wet. You don't have to take any outsized risk. You're sort of instantly diversified. And then from there, you have large producers and maybe a royalty company or two. And then from the producers, and then your risk gradually goes up if you have sort of developers or developing producers. And then you have the junior space. And, you know, silver is volatile. I'm the first one to say it. And that's not just the metal itself, but the stocks in that whole range of options. But there are ways to mitigate that risk. You can gradually buy into a position. You can buy smaller positions. And I encourage people, if there's a stock or something along those lines that they like, to take a small position. I feel that there's no better way to almost force yourself to follow a company really closely. Just having a very, very small position is enough to tie you to that commitment. And then you start to watch it. And then if you see things go well, then you could perhaps buy a little bit more. If you, for some reason it doesn't go well, just go back and ask yourself, has anything significant changed with the company? Is my thesis about their outlook and their plans, their projects, has that remained the same, but is the market maybe discounting it unfairly for some reason? And if that's the case, you might want to use that opportunity at a lower price to just add a little bit to your position. But I would say don't let the volatility scare you. Expect it, plan for it, adjust accordingly by position sizing and by layering in.
You make it sound definitely very doable. So that's all from me today, unless you had any final words on silver or advice for investors heading into 2023 that you want to leave us with.
So I guess the only thing I would say is that it's a small market. As I say, it is volatile, but I think that, you know, if you look at silver today versus all of the base metals, the precious metals, the platinum group metals, specialty metals, it's the only metal that is still below its all-time high. It's actually, nominally, it's still at 50%, not even 50% below its all-time high. And if you look after inflation, it's about 90% below its all-time high. There's no other metal I know of that you could say that about, and it's a well-known and it's a well understood metal, and that to me just spells opportunity. I believe it belongs in everyone's portfolio in some level, in some form.
Okay, well, that sounds like a great place to wrap up. Thank you so much for going over everything in silver today with us.
Pleasure, my pleasure. Thank you.
Of course, and once again, I'm Charlotte McLeod with the Investing News Network, and this is Peter Krauth with Silver Stock Investor and author of The Great Silver Bull.